Travis, today we're going to talk about something that honestly isn't getting enough attention, and it's the massive amount of money that's being invested back into America again.
Yeah, when you hear that, Steve, I mean, most people hear about AI and immediately think what? Software, chatbots, but what they're missing is that AI requires an enormous amount of physical infrastructure to be built.
Yeah, exactly. And people think AI just lives in the cloud, but the cloud, there are giant warehouses full of computers, cooling systems, chips, fiber optics, and then massive power usage.
That might be coming to your neighborhood. The cloud might be coming to your neighborhood,
That's
right?
right.
So
it has here in Omaha, that's for sure.
But so this is where things get interesting economically. We're seeing billions and billions of dollars flowing into those data centers, semiconductor plants, energy infrastructure, and even manufacturing facilities.
Yeah, Charles, for years, the economy's been driven by low interest rates, globalization, and digital growth. Now it feels like we're entering into a different phase, and one where the physical capital is actually going to start mattering again.
Yeah, and you're seeing it everywhere. I mean, companies are reshoring manufacturing back to the United States. Supply chains, they were a huge issue during COVID, right? A lot of gaps opened up there, people saw. So now national security is becoming part of the economic conversation too.
Right, and we're building semiconductor plants in the U.S. again. Utilities are talking about power demands in ways they haven't in decades. Even construction and skilled labor are becoming major themes in our markets again.
Yeah, and it's not just AI driving this, driving a large portion of it, but it's not just AI. It's back to that infrastructure spending, defense spending, energy investment, which is going to be huge. And when you think about all this, Steve, you have all these trends or multiple trends, and they're all hitting at about the same time right now.
Yeah, that's right. What's important for investors to understand is leadership in the market could broaden over time. So for a long stretch, we've just had these handful of these top 10 tech companies driving almost everything, and that's probably going to change.
Yeah, we've talked about that top-heavy market for a long time. And those companies, I mean, they continue to do very well. Most of them are great companies. But, this environment could also create opportunities in other areas, unloved areas of the market. You could look at some industrials. You could look at infrastructure plays. You could look at utilities, energy, and other areas tied to what we're calling here this long-term capital investment cycle.
Yeah, one thing we always remind our clients is that major economic shifts, they don't happen overnight, but when capital starts flowing in a certain direction, those trends can last for years.
Yeah, I think Charlie Munger called it riding the wave. Ride the wave of whatever it is, and so that's why we spend so much time focusing on long-term themes instead of just reacting to, daily or falling into the trap of reacting to daily headlines.
Yeah, Travis, headlines, we've talked about this. They create noise. The media wants our attention. Long-term capital flows, though, they create opportunities. The economy over the next 10 years could look very different than the economy over this last 10, that's for sure.
I think that's almost a certainty, in terms of it looking different. And as investors, staying diversified, staying focused on long-term trends instead of short-term fear, is still incredibly important, and it will remain incredibly important. And as always, it'll be difficult as well.
That's true, Travis. This has been great. I look forward to it next week.
Look forward to it as well.